Well, hello guys, good to see you again. And if you're new to my channel, then welcome, really good to have you. If you are a returning viewer or subscriber, I hope that my audio quality is improved because I'm now using a microphone. So I've upgraded a little bit. I'm using my iPhone to record these videos, so it's not the best quality. So I really do appreciate those of you who are sticking around until I'm able to upgrade my equipment. But I've taken the first step to upgrading my equipment, which is my microphone. So I hope it's going to make a difference to this video quality. But today I'm really excited because I will be sharing my Vanguard portfolio with you. So you may have seen already that I've done an entire 4-part series on Vanguard, including the history of Vanguard, the fees they charge, the type of funds they offer, important investor information you should know. I've covered it all in my series, which is linked above. But one thing that I didn't do is share my actual Vanguard portfolio. So today's video is all about that. So real quick, before I open the spreadsheet and we dig into the investments, I wanted to let you know that I have a Vanguard stocks and shares ISA, and I have very recently also opened a SIP with Vanguard. But for today's video, I will only be covering the stocks and shares ISA that I have. Okay, so let's get into this. So I will go through fund by fund. I will explain what my goal weight is, so how much of the investment portfolio am I desiring for it to take up, what the current weight is, and I'll explain why that's different. And then I will show you the return rate per fund. And then at the end, I will show you the total return rate of my entire Vanguard portfolio. Okay, so the first fund that I have, the FTSE All World ETF. So this is a global tracker, and I really think that it's fundamental when it comes to long-term investing that you do have at least one global tracker in your portfolio. Now, of course, this isn't financial advice because I'm not a financial advisor, but the reason why I do this personally is because it spreads the risk. So by having a global tracker or something that's tracking the entire stock market, it allows me to spread the risk between different countries. So the way that I like to think of it is, what is the likelihood that every single country's stock market will crash? And I think that is really quite unlikely. It's not impossible. Anything is possible when it comes to investing. You always have to take everything with a grain of salt and know that, okay, you can technically lose everything that you put in, but I think it's quite unlikely that the entire world's stock market will crash. And so I really love to have a global tracker. So the goal weight for this is 50%. So the majority of my portfolio is in a global tracker, but my current weight is 46%. And the reason why this differs is for a few reasons. So each month when I invest into the Vanguard portfolio, I can't get it exactly to match up. So percentage wise, I can't get it to match up across all of the funds. Another thing is you get income or dividends that are paid into these funds. So that makes a difference sometimes and causes a fluctuation, but also the return rate causes fluctuation. So if an ETF has gone way up, then it's gonna make a difference. It's gonna take up a larger proportion of your portfolio. And if a ETF or index fund is doing really bad, then it's gonna take up less of your portfolio in comparison to the rest of the stocks that you hold. Now for the return rate, it is at 2.92% currently. So it's not fantastic. We'll say that a big reason for this is because I have only recently sold my Life Strategy 100 fund. I changed up my strategy a little bit and decided that I didn't want to be invested in blended funds anymore, but I wanted to be in control of what I'm investing in a bit more. And so I sold my Life Strategy investment, I took the profit and reinvested it back into this FTSE All World ETF. And so that's why this return rate is on the lower side. So the next fund that I have in my portfolio is the Pacific Excluding Japan Stock Index Fund. And it's an accumulation fund, which means that when dividends are paid, it's just automatically reinvested into your investment. So I love this fund, and I love this fund because I really do think we need to watch out for Asia. I recently had read a few articles speaking about the Asian stock market and how it's projected to overtake the rest of the world in many aspects. And I fully believe this. I think this is the direction that we're heading in. So this is one of my favorite ones, and I may eventually increase this fund and decrease a few other funds, but watch this space for that. So currently I have the goal weight of 10%, and my current weight though is 14.3%, which I'm completely not mad at. And the return rate is 14.1%. So this fund is doing really well. I'm really happy with the result. And as I said, I may tweak that eventually and have that goal weight closer to 15%, which it currently is, because I really do see that, you know, Asia is a really big growing economy. And obviously Asia is huge, it's a continent, but many countries within Asia have a rapidly growing economy, and I want to be in it. So the next fund that I have is the S&P 500. Of course, I'd have to have this in my fund, and the ticker symbol is VUSA. The goal weight for this is also 10%, and my current weight is 8.2%. And for my return rate, it is 2.63%. So again, low like the FTSE All World. But the reason for this is because this is a more recent investment in my portfolio. So originally, I probably should say this. Originally, I had the Life Strategy 100 fund, I had the Pacific Asia fund, and I had one other fund, which I'll show you afterwards. And that was it. I had 3 funds in my portfolio. And so these newer ones that I have added in aren't really doing as well, but it's because they haven't had as much time. Okay, and so my next fund is the FTSE 250, which I just did a video about. I'm all in with this one. I don't have the FTSE 100, I have the FTSE 250 just because it has performed quite a bit better than the FTSE 100 historically, but I'm not bad-mouthing the FTSE 100 at all. I get why people have it in their portfolios, but I feel more comfortable with this one. The goal weight for this is again 10%, and the current weight is 9.9%. So I'm pretty much bang on with this one, which is cool. And the return rate is 0.2%. I'll give it some time. My next fund is the ESG Emerging Markets All Cap Equity Index Fund. Now this one says ESG because it's a ethical or socially responsible investment fund, and so it just means that the companies included within this fund have had to meet certain criteria in order to be included in this fund. So there's kind of a vetting process, which is cool because at least you feel confident in the fact that these companies are ethical according to the standards that they have. I really thought this was important to have in the portfolio, an emerging markets fund, because it's great to, you know, invest in the developed world, but the developing world is coming up as well. And so that's why I have this in my portfolio. Goal weight for this again is, surprise, surprise, 10%. And my current weight is 10.9%, so just a little bit over the goal weight. And the return rate is 3.69%. Right, so the final fund that I have in my portfolio is the FTSE All World High Dividend Yield ETF, ticker symbol VHYL. Now this was the other one that I had originally in my investment portfolio. So the good thing with this one is that it essentially invests in companies that pay higher dividends. So this one is more of an income generating fund or investment. And although it's income generating, I won't be withdrawing the income because I don't need it right now, but I will be reinvesting any of that income that I get from this. So the goal weight is 10% and my current weight is 10.8%. So very close again, but the return rate is 10.3%. So really happy with this. If I can achieve between 10 to 12% year on year, I'm a happy bunny. So that really is my goal. Now for the total return of this investment portfolio, it is 12.47%. So 12.5%. So just above what I would like to see on a year-on-year basis. And I need to give the other funds, as I said, a bit more time. And I really think it will start to boost up my total return rate. But to be honest, I'm really happy with it right now. I will surely be updating you on this portfolio, because as much as I love to see them, I'm assuming that my viewers also like to see these portfolio updates. I'm not entirely sure yet whether I will do these on a quarterly basis or a monthly basis. I haven't decided, so that's why I'm not going to commit as of yet, but I will make sure that I do regular updates so that I keep you guys in the know. And it's nice for me as well to honestly just reflect and see how all my investments are doing. So thank you so much for watching, and I hope you've enjoyed this video. If you have, make sure to like. If you're not subscribed, make sure to subscribe. I should have said that at the beginning of the video, but I didn't. And I look forward to seeing you in the next video real soon.